Good evening, everyone. Good evening, ladies and gentlemen. It's a pleasure to have you today for yet an interesting talk. My name is Jonan Kandwanaho, and I'm the Managing Director at Jonaki Holdings Limited. And at Jonaki Holdings Limited, we lend money. We offer credit. We've been doing that for quite some time, over 7 years now. So we look forward to serving you, and we look forward to working with you. So we always have business meetings from 5:30 to 6 p.m. every Friday of the week. And we come here to sharpen one another. Iron sharpens iron. So we come here to interact, to share with each other and support each other and learn from one another, especially or in the area of business. So we specifically talk business here. So it's a pleasure to have you. And I'm glad that you've tuned in for yet today's engagement. So today we have quite an interesting topic. If you don't have a money lending company or a microfinance institution or any of the kind, you've lent money before, whether knowingly or unknowingly. The only difference is that you lent it out interest-free, meaning that you didn't charge the client or the person that you lent to. But that's not an immunity for the client not to default on you or default on your money. So meaning that whether you lend money interest-free or with interest, either way, a client has a possibility or likelihood of defaulting on you. So that's why the statement came from, or the adage came from, of you can only lend money that you can afford to lose. So if you're lending money to someone, especially if you're not registered or regulated or licensed to lend money, is that you should lend money to someone that you can actually afford to lose, meaning that even if you lost that money, it won't have a negative consequence or an implication on your life. You won't miss having dinner or lunch, or your family will not starve just because you've lent someone money and he has failed or she has failed to pay. So you can only lend money that you can afford to lose. That's where that adage came from. And that's why it's important that whether you're lending money formally or as an individual, you desist from the same, or else you give. If you can lend you money that I can afford to lose, then I'd rather give it to you free of charge. As a token, I just say, you know what? Let me bless you. I've given you this money. Yes, so when we come to money lending, there are lots of risks that come along. And that's why in all my sharings, I've been sharing with you how you can insulate yourself. Because if you don't insulate yourself, you're most likely going to get out of business. In one or the other, just counting down. If you've not gotten out of business, you're most likely going to get out of business. I'm not predicting doom. This is the reality. If you do not watch, if you do not step up your thing, you're going to get out of business. Why? Because the business that we're running is a little risky, just like any other businesses, but this is exceptionally risky. You're giving your principal, your hard-earned money to someone. So meaning that as you give it out, it's important that you actually secure it. It's important that you have the assurance that this money is going to come back. And that's what calls for collateral. Meaning that any money that comes out, it should be 100% secure. Now, challenge comes if you're not formally registered, if you're not licensed to lend the money, meaning that you might not be able to express your interest on the collateral if you're not formally registered or if you're not licensed. I'll give you an example. If someone comes and he wants money and he gives you a land title, how else do you express your interest on that land title without putting a mortgage on it? It means you can only look at it and you can only keep it in your safe. And behold, someone will go to lands and say that the land title is lost and they'll process for him a special title, especially if that person has money. Now, the person might not necessarily have money, but he might actually use the money that he gets from you to actually do the same. Go to lands and say, I lost my title, process a new one. And behold, you have a title in your safe. It is fully in the person's names. It is original, but it's cancelled. Why? Because you did not express interest on that title. And yet, had you put a mortgage on that title, it would have been hard for this person to come and allege that he lost the title, yet he put it to the bank, or he gave it to you, and he got money from you. That's what informed today's topic. Fraudsters' tricks in money lending. These fraudsters, every day that passes, get advanced tricks that they can use to defraud people of their money. And that's what informed today's topic. If you do not work together to fight these fraudsters, we are not going to thrive in business. If we do not step up our game, we are not going to survive. Because every day that passes, guys who need free money, guys who need money they've not worked for are very many. And they're increasing. And they're scratching their heads. That whereas you're planning, whereas you're streamlining, whereas you're formalizing your business, these guys are also not seated. They're thinking for you. They're stepping up their game. So we have fraudsters, quite a number of them. Some of them look posh. Some of them they have hyped lives. They drive high-end cars. So if your judgment is based on the car that someone drives, if your judgment is based on the appearance of someone with a tummy and huge and looking good, guys, these people con money and after they spend it like there is no tomorrow because they've not worked for it. You find them in those high-end places. You find them eating very nice food and gymming. So why don't they look good? They definitely look good. And you just look at them and judge that, these guys, I think this person has a lot of money. And if I give him 50 million or 100 million, he'll definitely pay me. He looks money. That's a challenge we have. Just because I met you at Serena does not qualify me to actually to receive 50 million from you. Does not qualify my financial stand. You see, so it's important that we get to learn these tricks. And until we learn these tricks and look for the ways of addressing them or countering them, we shall still suffer at the expense or at the disposal of those fraudsters. We shall still suffer. So there are quite a number of tricks, but I'm going to, because of time, and these are the experiences that we share with the guys that we mentor. These are the experiences that we share with guys that we coach. Because if I've gone through the experience, if I've lost some money to a particular fraudster through particular means, if I share with you and the guy comes in the same image or same picture or same approach, you'll be able to maneuver. You'll be able to counter him. You will not give him your money. So meaning that you will not lose that 50 million, that 100 million. So the challenge, the tricks I am going to highlight below are going to help you avoid such fraudsters. The first trick, I'll align them according to the collaterals. So first of all, it's important that you don't give out money without any collateral. All the money that should come from your business, and I'm especially speaking to people who are licensed and who are formally registered. Every money that comes from your business, if you lend money, should be secured 100%. That's the first principle. It has to be secured. Meaning that if I want 50 million from you, I should either commit a car that has a value that is 100 million and above. Because remember, we don't give according to the market value. We give according to the forced sale value. And we don't give all the forced sale value. If you bring the car as a collateral and it's valued at 100 million as the market value, meaning that if I move to the market and I want this car, I part with 100 million to acquire it. So that is the market value of that car. Now, the forced sale value of that car might be 70 million. Based on the valuer. Because you need to use a professional valuer. Don't use your eyes. Use a professional valuer to value your car. Because there are lots of things that they look at. Use professionals. That even when you go to the courts of law, you'll have a stand. So the forced sale value might be in 70 million. So meaning that depending on the percentage that you give of the forced sale, us we give 50% of the forced sale value. So if it's 70 million as a forced sale value, we give you the 50% of that value. And that is 35 million. So even if the client gets out of hand, even if the client becomes errant, even if there's some issues that you have to work out and you take a bit of time, you're not at a loss. You're not at a loss. So your money is fully secured. So that's why I'm telling you that every money that comes from your company, from your business, it should be 100% secured. So meaning that had this guy come for 100 million and the car, his new car is valued at 100 million as the market value, it means that the guy has afforded to sell it to me. That even if he loses it, he has basically sold the car to me. And many of the clients that come in that picture, the clients come to you and they tell you, you know what? I want a loan. You're like, how much? 50 million. To value the car, the market value of that very car is 50 million. So in essence, the guy is just selling the car. And at that moment, you basically don't need the car. As a matter of fact, you could even be having your personal car. So what the more car for? You don't have it in plan. That's why it's important that your money that comes out of your business should be secure, 100%. Perfect. So that is sorted. 2, I'm going to take you through the collaterals. So you might have varying collaterals that you ask for to secure the monies that you give to your clients. Like at Jonaki Holdings Limited, we have different categories of the collaterals. We have electronics, we have Callout books, and we have land titles. So let me start with electronics. Electronics majorly are laptops. Laptops, sometimes we used to do mobile phones, but we no longer do mobile phones because a person might rob the mobile phone from a person or even kill someone, and then he brings the collateral to you. Yes, it's valued above the amount of money that he wants, and you even consider the for sale value, but then the phone has an issue. The guy got it from a person whom he lynched. He killed this guy. So you do not want to get into such issues or such matters. So we did away with phones, mobile phones. So we now on laptops that fall under electronics. If you want 2 million and if you bring a laptop that is worth 2 million, as a market value, we shall not give you the money. So we can only do the valuation through our valuer to get the actual value of the laptop and give you 50% of the first sale value. So what are those tricks that these chaps come with? First of all, he comes with the laptop that is outdated, could even be new, but the guy just wants to sell the laptop. And given that it's marketed or sold at 2 million, he comes for a loan of 2 million. That's one of the tricks. So when time comes for payment, he will say, you know what, I failed to get money. And you look up, you want to sell the laptop, the guy is giving you half the money. If you give him 2 million, the guy is giving you 1 million. You are at a loss of 1 million shillings. In addition to the interest that you have lost in this 1 or 2 or 3 months, that the guy has spent negotiating back and forth, telling you have not got the money, wait. They don't even tell you the truth that they don't have money or they were defrauding you. They will keep promising you they're going to pay you. And by the time you realize, you're at a loss on interest as well as part of the principal. Because the item, even if you sell it off, it cannot fetch the money that you gave this guy. So that's the first thing. That's one of the tricksters. Secondly, the guy gives you a Mac. For example, if I take an example of a Mac Pro book, some Apple, if it's an Apple laptop, the windows are very hard to crash. Guy gives you a laptop and it has a password in it. So you cannot do anything with it. You cannot hack into his account. So it's important that as you accept the collateral of the laptop, the passwords are fully put in the laptop to ensure that it's fully open. If it's not fully open, you reach a moment to dispose of the laptop. If it's an Apple product, if it's a Mac, you will not be able to sell it. Why? Because it has a password and you cannot crack it. At least for other laptops, you might crack the passwords, but for an Apple laptop, it is very hard. So meaning that you are at a loss. You are the mercy of this guy. You are the mercy of this guy to come and give you the password. And the moment the client gets the money, getting them again is very hard. Especially if something went wrong. Especially if he's a fraudster. You'll find it hard to dispose of that item. So it's important that if you accept a collateral as a laptop, the passwords are fully put in that very electronic, if you consider it. And then 2, it has to be in your custody. Not the thing of, I've showed you my laptop, I'm going to keep with it, I'm using it. Boss, if time comes and the guy is not paying, what will you do? Are you going to look him up and get that laptop? So it has to be in your custody. It has to be in your custody. So some of the tricksters, some of the fraudsters use the tricks of pretending that they use the laptops to even generate the money they're going to pay you. And for you, out of your kindness and mercy, you tell them, you know what, you can keep with your laptop. And eventually, when the guy fails to pay, you don't have anything to foreclose on. You don't have a collateral. You lose the principal money plus the interest that you'd have acquired or accumulated from the transaction. So you lose out. You're at a loss. Why? Because the guy played on your psyche. He played on your mind. So that's a trick under electronics that you may have to consider or look at. Great. So if you step it up further, we go to the land titles. Now these are the most faked things on this planet if it comes to transactions in lending money. And they're the most things that fraudsters use to put their trickery to get your money. And at the end of the day, you make a loss. So the first one is giving you a collateral of a land that is not in their names. If the land title is not in the names of the client, do not, and I repeat, do not allow the client to use it as a collateral. Because the other person is going to come in whose names it is, and he claims the title. And ideally, you do not have a right to give money to a client whose title is not in their names. You're not allowed. So the first thing they will tell you, I have a title, but this title is not in my names. So the best thing you can do for your company and yourself is tell the client that, you know what, I would have loved to serve you, but unfortunately I cannot serve you. We only work with titles in whose names is a client who is applying for a loan. Number one. Number two, some fraudsters will come to you and they tell you, I have ndagano for Ibanja. Now let me ask you a question. If this guy comes and he gives you ndagano for Ibanja, can't he get another ndagano? It's just a few coins, a few monies. He'll go and organize the chairman and the guys who wrote on the same ndagano, they will draft for him another agreement. So don't deal with agreements of Ibanja. Because if things turn around, the guy has a liberty to process another agreement. And the other thing is that you cannot express your interest or show that you have interest on a chibanja on whose it is that they gave you ndagano or the agreement. It does not hold. It is not recognized in our laws. You cannot foreclose on a ndagano. You cannot transfer it from this client's names to your names or other person's names or the buyer's names. So ndagano is out of picture. So they will come to you, the fraudsters will come to you, and they say, I have a ndagano of my chibanja and I want money. So if you're looking at the interest without considering the principle that you're risking, you give this guy the money. Even if you know this person, it is a huge risk. You give this guy money and you cannot recover. So I advise that you do not work with agreements, land agreements on ndagano. 3, on the title still, these guys will come. One experience we had is a person can fake the actual owner's names. For example, if I have a land title in my names, John and Kandwanaho, the guy will come and forge my national ID. The guy will come and forge the title. They can make very, very authentic titles on NASA Road. He will forge a title in my names. He will know. Usually, such fraudsters are high-end, and they know to the detail the ownership of the land. They study the land. They connive with the chairpersons or chairmen of the area. It's a racket of crooks. It's a racket of fraudsters. So they forge from the national ID to the title itself, to the phone number sometimes, almost everything. So they reach a moment and they bring this title to you and they want money, usually big monies. You go to the land, the thing is valued to maybe 300 million, and this guy wants 150 million. Even if it were 100 million, you think it's a genuine thing. So you go to the title, you go to the site, even the chairperson, you look at the chairman of the area. Sometimes the chairmen are given money and they disappear on that day. You get there, the guy is not there. They even stage a person as the chairman of the area. So you go, transact on the land in whose names is the client. When it comes, especially if you give money before you put a mortgage. So when it comes to putting a mortgage on the land title, ideally when you pay in URA, they send an email to the actual owner of the land. So when the actual owner gets this notification, and given that he didn't put this land in the bank, or land title in the bank, and he didn't expect anything from the URA, he will dash to land office and he will stop the transaction. So you cannot put a mortgage on the land title. And that is where the game starts. You start fidgeting. That's when you know that they have conned you. So it's important that before you dispense money from your account, first of all, make sure that you've done your due diligence. That even when you go with a client to the land, commit another day with your operations person to go to the site. And he finds out the actual owner of the land, interacts with the chairperson, interacts with the neighbors. You have to do due diligence. In absence of the client, you have to do your due diligence to find out the facts. Secondly, before you dispense money to the client's account, it's important that you perform a search. A search is meant to come with the picture of the person. A search is meant to come with the number now, your phone number, phone contact of the client, of the person, the actual owner. A search is supposed to come with a photo, colored photo of the person, the owner. So all these things might be very hard to forge, especially if the search is done in lands. And you have to know the person who does your search, because sometimes they could even connive with the guys who do your search. These guys fund the project from the word go. It is fully planned, it is fully set, basically to con you. So they give it a thought, a thorough discussion and thought. So it's important that you perform this search. And secondly, go to the area where the land is in absence of the client. Even when you've gone there with him, the following day go there in his absentia to find out, is it really true that this guy owns this land? Third, do not release money from your company account before you put a mortgage on this land title. Because then you'll have confirmed through an email by URA to this actual owner, if he's the actual owner. An email will be sent to him until they lodge a mortgage. And that's why processing a loan in a bank using a land title takes a while. Because they do their due diligence, they make sure they are fully sure that the land belongs to you. By putting a mortgage, they even give you time to confirm that the mortgage has been put. So do yourself a favor. Make sure that the mortgage is ready, put on the title before you dispense the money from your account. And then still on the land, it is important. There are some clients who come towards the weekend. He comes on a Friday, he wants a transaction, he puts you on pressure. Always be cautious of a person who puts you on pressure. If a client pushes you, of course there are some clients who are genuine, very genuine, and they are pushing you for a right cause. They are stuck but why wait for a Friday? Yes, granted, a case might arise on Friday. But why the pressure? That consistent pressure, and yet the collateral is a land title. You need to ask yourself, why this pressure? And eventually when you go to ask yourself, these are fraudsters. They are pushing you, they are making you make mistakes so they can get away with it. So calmly tell this client to calm down and take your time to do what you're meant to do. Not that it should take a long time to transact, but follow your process to the dot. Do not compromise, especially for new clients. Do not compromise. At least if it's a return client, there are some things that you might have to, but such a thing, first-time client, putting you on pressure, line title not in their names. Even if it's in their names, you cannot put a mortgage on the land title in just a few hours. So you have to make sure everything is done perfect. The last item, because there are details really, there are tricks that these guys use, quite a number of them, and we might not exhaust them in the 30 minutes that we have at hand. So I'm touching on them chap so that we can actually proceed to another category of the collateral, and this is Callout Book. Now for the Callout Book, there are key things you have to look at, because if I come and I want a loan and I give you my Callout Book, that does not prove, does not confirm your interest on the car. So ideally, this client is going to come. Usually these fraudsters come on a weekend or Friday. First of all, he knows Friday afternoon ERA might not be working. So meaning that you cannot put a caveat on this Callout Book. He's going to give you a book, a Callout Book, and what are you going to do with it? As soon as he gives it to you, his agent is on standby to transfer this car to another person. As soon as you receive this original logbook, the guy is already in the process of transferring the Callout Book. It is just a few minutes before the car is transferred to another person. And lo and behold, the car does not belong to you. Even if this guy parks it, it does not belong to you. He has transferred it to another party. So it's important that before you give out money to a client, that you first put a caveat on that Callout Book. Now, you might put a caveat on that Callout Book, but even then, a guy can go with the car and vandalize it, remove an engine, or they chop its spare parts. You cannot trace the car. So in addition to caveating the logbook, expressing your interest in the logbook, showing that you have interest on this, or you gave a loan against it, you need to track the car, install a tracker. There are companies that have tracking services, outsource and track the car so that you can know where it is. Others might even drive it out of Uganda to Congo, and the guy sells it. In Congo, you can even drive a car that doesn't have a number plate for 5 years. So a guy might sell it, take it to Congo and sell it. So you need to be very, very cautious. That's why it's important that you track it, know where it is, geofence it, that if it comes towards the border, you can actually know. This geofencing, the alert comes to you, shows you that, you know what, this person is moving towards the border. Be cautious. There's something happening here. Geofence it to the Ugandan boundaries. Third, do not dispense money. Do not dispense money when the caveat is not put on the car. And this one takes a very short time. In a matter of 1 hour, the caveat will be on the car logbook. And if you've tracked it, then you can dispense the money. So it's important that you caveat before you dispense the money. So the tricks these fraudsters use, that they come to you on a weekend on Saturday. They even tell you, I'm going to park this car. Even if the guy parks the car, there's nothing that you can do with it. Because first of all, it's not in your names. Secondly, it's not caveated to show that you have interest on the car, so meaning that the person can transfer it to another person. Third, it's a weekend. You cannot do anything. Government institutions are not working. Even some of the banks are not working. So you cannot even pay URA, process that payment for the caveat. So ideally, you are at a loss. You are at a loss. So summarizing, as I come to the close of this session, summarizing, always keep a watch on the clients that put you in a lot of pressure. Because why did you wait to come in an evening? Yes, granted, the challenge came. Why did you come on that last hour? Why that much pressure? Why the push? They even threaten, I'm going to withdraw. I'm going to withdraw. Calmly advise the client that if you're to withdraw, rather than risking your principal. So do not risk your principal at the expense of the interest that you've not even acquired. Don't risk your money thinking that you're going to make more money. Fraudsters are very, 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 very many. They are very, very, very many. So if you have to keep in business, it's important that you keep cautious of fraudsters in money lending. Finally, and very, very finally, make sure that these clients have sound cash flows. Because at the end of the day, your interest is not the collateral. And that's what I usually advise the clients. Your interest is not foreclosed on that land title. Your interest is not to sell that car. Your interest and prayer is that this client gets the money that he hopes to get, and he pays, and you part peacefully. Because as I earlier shared in my previous sharings, you can look it up on my YouTube channel, is that most of our businesses run on word of mouth. If you clash with the client through word of mouth, you might not progress so much. You might miss out on the clients you'd have gotten if the word of mouth was good, if there were plus from clients. We benefit most from referrals, from colleagues, referrals from clients that we served well. So foreclosure should not be the ultimate, but rather for the client to pay so that you can transact and part on good terms. That's when the client is going to recommend other clients. So if you're going to sustainably keep in business and grow, it's important that you maximize on the client paying back, and that can be ensured by looking at their bank statement to ensure that they have the cash flow. Some of them will come to lie to you. Some of them have shops in Chikubo. He will come and say, in Chikubo, for us, we have business in Chikubo, as we don't bank money. Now, if you don't bank money, how will I know that you have a cash flow? How will I know that you have a constant flow of income? How will I know? I don't run your business. So such fraudsters come and tell you these words: me, I don't bank, my account is not busy, blah, blah, blah. Tell them, if I cannot verify, if I cannot confirm your cash flow or your income, I cannot give you money. One thing you should know is that you've worked for this money. It was not given to you free of charge. So take your time. The good clients will come. Very, very good clients are out there. And you'll do business, and you'll progress, and you'll grow together. Thank you guys for tuning in today. I see our time is fast spent. Thank you so much. Have a blessed Friday and enjoy the rest of the weekend. I love you, and God richly bless you. Blessings. Cheers.